Burry, the investor who became famous for predicting the massive 2008 housing market collapse in the US, appears to have recently placed a big bet against the US stock market.
As we move forward through the uncertain times of 2023, the stock market has surprisingly surpassed the predictions of experienced investors. However, September is approaching, a month that has a reputation for being the worst performing month for the stock market since 1945. In the past, the S&P 500 has shown a decline during September 56% of the time, making it the only month more likely to decline than advance. On average, the S&P 500 has a negative return of 1% during this risky month. With that in mind, let's delve into 5 top dividend stocks poised for growth, which we recommend keeping a close watch on in September. SBUX Corporation, a globally recognized and beloved coffee chain, emerges as our first contender among the top dividend stocks to watch in September 2023. With a substantial market capitalization of approximately $110 billion, SBUX has solidified its position as a coffee industry leader, with a presence in the United States and globally. This coffee giant's journey in 2023 has been a mixed one, with the stock performing exceptionally well over the past 12 months, posting an impressive 18% gain. However, year to date, SBUX has faced challenges, with its stock showing a 2% decline. SBUX operations primarily revolve around 2 key markets, the United States and China. While few competitors can compete with its scale and global recognition, the company's performance in 2023 has been closely tied to developments in China. Initially, shares of SBUX soared to $115 over the first 4 months of the year, mainly due to optimism surrounding the reopening of China and the anticipated growth in that region. However, the expected boom in China has yet to materialize as quickly as anticipated, largely due to economic challenges, including real estate issues and consumer unemployment. Nevertheless, there's a silver lining in SBUX' global presence. Despite the hiccups in China, the company's most recent quarterly report displayed positive signs. Notably, this multiple falls well below SBUX' 10-year average of 30.6 times, indicating that the stock may be trading at an attractive valuation. Analysts share a moderate buy sentiment regarding SBUX and have established an average 12-month price target of $115. This target implies a substantial 16% upside potential from the current stock price, making SBUX an appealing dividend stock to consider as we approach the challenging terrain of September. Charles Schwab, a prominent player in the world of wealth management, financial advisory services, and brokerage services, takes its place as the second contender in our list of top dividend stocks to watch in September 2023. With a robust market capitalization of approximately $105 billion, Charles Schwab's presence in the financial industry is undeniable. However, the stock has encountered its share of challenges in 2023, experiencing an 18% decline over the past 12 months, and a notable 27% year-to-date dip. The early part of 2023 witnessed Charles Schwab and several other banks and financial institutions grappling with a mini banking crisis. This event cast a shadow of uncertainty over the financial sector. However, recent earnings reports have provided much-needed assurance. These reports indicate healthy liquidity and the return of capital into the brokerage company, leading to total assets surpassing a staggering $82 trillion. These developments signify a renewed sense of stability in Charles Schwab's operations. From an income perspective, Charles Schwab offers a dividend yield of 1.7%. The company has also demonstrated a commendable 5-year dividend growth rate of 14%, highlighting its commitment to rewarding shareholders through consistent dividend increases. Although dividend growth briefly paused in 2022 due to pandemic-related uncertainties, Charles Schwab had consistently raised dividends in the years leading up to that point. Regarding valuation, Charles Schwab shares currently trade at a discount of 31 Albemarle Corporation, a key player in the chemicals industry focusing on lithium, emerges as the third contender on our list of top dividend stocks to watch in September 2023. With a market capitalization of approximately $22 billion, Albemarle's role in the EV sector, especially in supplying lithium, positions it as a significant contributor to the burgeoning EV market. However, the stock has faced its share of challenges in 2023, with a 33% decline over the past 12 months and an 8% year-to-date decrease. Despite these challenges, Albemarle is a leading global lithium miner, a pivotal component in the EV market supply chain. Albemarle's fortunes are intricately linked to EV manufacturers, particularly in China, which boasts the world's largest EV market. The demand for lithium and its pricing dynamics are key drivers of Albemarle's performance. From a dividend perspective, Albemarle currently offers a dividend yield just below 1%. The company has demonstrated a modest 5-year dividend growth rate of 4%. However, what sets Albemarle apart is its remarkable track record of consistently increasing dividends for an impressive 29 consecutive years. One aspect stands out prominently when assessing Albemarle's valuation. Its shares have experienced a substantial decline of nearly 70% from their 52-week highs in Q4 2022. Analysts' 2024 earnings per share projections of $21.73, reflecting an 18% decrease from 2023, resulting in a forward price-to-earnings multiple of just 8.7 times. This multiple is comfortably below Albemarle's 10-year average of 20 times, signaling that the stock may be trading at a substantial discount. Analysts maintain a moderate buy sentiment regarding Albemarle and have established an average 12-month price target of $264. The target implies a remarkable 33% upside potential from the current stock price, making Albemarle an enticing dividend stock to consider, particularly for those seeking value and growth potential. The Hershey Company, renowned for its delectable chocolate treats and an iconic presence in the food industry, takes its place as the fourth contender in our list of top dividend stocks to watch in September 2023. With a market capitalization of approximately $45 billion, Hershey's chocolatey offerings have delighted consumers across the globe. However, the stock's performance in 2023 has been mixed, with a 5% decline over the past 12 months and a notable 20% dip since May. Nevertheless, year-to-date, Hershey's shares have only retreated by 4%. The Hershey Company's product portfolio extends far beyond its famous Hershey's bars, which remain a must-have ingredient for making s'mores on camping trips. The company's diverse range of products include Reese's, Twizzlers, Kit Kat, Rolo, Pirate's Booty, and many more. While Hershey may not be the most growth-oriented company, its consistency shines through. In fact, it's worth noting that in 18 of the past 20 years, Hershey has achieved positive earnings per share growth. Out of those 20 years, 11 registered double-digit growth. This impressive track record underscores Hershey's reliability as an investment. From a dividend perspective, the Hershey Company currently offers a dividend yield of 2.2%. The company has also maintained a commendable 5-year dividend growth rate of 10%, demonstrating its commitment to rewarding shareholders through consistent dividend increases. Although Hershey paused dividend growth briefly in 2022 due to pandemic-related uncertainties, the company had consistently raised dividends in the years leading up to that point. In terms of valuation, Hershey's shares currently trade at a notable discount of 31% from their 52-week highs. Analysts' projections for 2024 EPS of $10.30, reflecting an 8% increase from 2023 estimates, resulting in a forward price-to-earnings multiple of 21.1 times. Importantly, this multiple falls below Hershey's 10-year average of 24.5 times, indicating that the stock may be trading at an attractive valuation. Analysts share a moderate buy sentiment regarding the Hershey Company and have established an average 12-month price target of $261. This target implies a substantial 20% upside potential from the current stock price, making Hershey an enticing dividend stock to consider as we approach the challenges of September. ASML Holdings, a significant player in the semiconductor equipment sector, takes the 5th spot in our list of top dividend stocks to watch in September 2023. ASML is known for supplying critical technology used in semiconductor manufacturing, making it an essential contributor to the production of advanced chips. With a robust market capitalization of approximately $260 billion, ASML's performance in 2023 has been exceptional, with an impressive 33% gain over the past 12 months and a substantial 21% year-to-date increase. ASML's unique position in the AI and technology sector, particularly in semiconductor equipment, presents an intriguing investment opportunity. The company benefits from the surging demand for advanced chips used in various applications, including AI. As the demand for high-performance computing continues to grow, ASML's products become increasingly essential in the semiconductor supply chain. From a dividend perspective, ASML offers a trailing 12-month dividend yield of nearly 1%. However, what sets ASML apart is its impressive 5-year dividend growth rate of close to 30%. The company recently transitioned to quarterly dividend payments, a move that aligns with its commitment to rewarding shareholders through dividend growth. Analysts anticipate a 2024 EPS of $24.35 per share in terms of valuation, marking a 14% increase from 2023. This results in a forward price-to-earnings multiple of 27 times, which is below ASML's 10-year average of 33 times. Given its growth potential, this indicates that the stock may be trading at a reasonable valuation. Additionally, ASML stands out for its exceptional EPS growth projections, with expectations of 39% growth in 2023 and 32% growth in 2025. Analysts share a moderate buy sentiment regarding ASML and have established an average 12-month price target of $186. This target implies a remarkable 20% upside potential from the current stock price, making ASML an intriguing dividend stock to consider as we approach the challenges of September. As September, historically the most challenging month for the stock market, approaches, it is crucial to remain vigilant and well prepared for potential opportunities. The 5 dividend stocks we discussed, SBUX Corporation, Charles Schwab, Albemarle Corporation, The Hershey Company, and ASML Holdings, exhibit unique strengths and promising upside potential. Keeping these stocks on your watch list and being prepared to seize the right opportunities that may arise during this historically turbulent month in the market is prudent. Remember that investing requires patience and a long-term perspective. Choose your investments wisely and stay focused on your financial goals.